everybody, and welcome back to the Dash Trader Newsroom. Are you the next number one best trader? Of course, we got all kinds of things to cover in the news. We have a government shutdown, regional banks on the brink, and of course, we have some peace potentially in the Middle East. Hopefully that turns out. But let's first talk about something a little bit on the lighter side and the funner side. We have the number one best trader. Registration is open. Who will be this year's number one best trader? I can't wait to see everybody trading yet again as the competition starts. Remember, the early bird discount ends on 10/20/25. That's this upcoming Monday, so you get $50 off if you sign up by Monday. So this is the chance that you get to get extra time by signing up early. And of course, you get that $50 off. So let's jump right into the news. My name is Michael DeJar. I'm the Director of Educational Services here at Dash Trader. And I'm joined by my co-host, Jill Molandrino from the Nasdaq market site. Jill, how are you?
Good. Doing well. It's almost Friday.
Yes, we're getting there. But we got a lot of news to go over. So we once again, I almost feel like this is deja vu when you and I meet on these newsrooms. We have a federal government shutdown. So far, it's been for 15 days. However, I'm getting my gut is telling me that this might be the longest one in history. The last previous longest government shutdown was 35 days, and that was under Trump 1.0. Stocks are falling mainly on concerns today. Stocks are falling mainly on concerns about regional banks. Another deja vu moment. As they have lots of bad loans on their balance sheets. This, brings to mind Signature Bank and some others. This time it's Zions Bank. I feel like we've been here before, Jill. So just try to fill me in on what's going on this time around.
Yeah, so it's interesting. We'll also talk about it from the perspective of market performance as well. But just for some history here, since 1976, there's been 21 government shutdowns, and to your point, 35 days, which was the longest. What was it, December 22nd, 2018 to January 25th, 2019. The most recent one that we're referencing, that was only partial shutdown, as almost half of the 12 appropriations were previously enacted. So in that time span from 76 until now, there have only been 4 true shutdowns in which operations were affected for more than one business day. On average, the shutdowns last 8 days. So we are certainly, we were certainly, double that, and it appears as if it's going to go on even longer, as there has not been, as of this, at 3:39 on Thursday afternoon, any progress that has been made. I think when you look at it in context of the market, we have to also remember that the market and the economy are two different things. The people that are impacted by the shutdown, certainly they are feeling it, and it doesn't appear to be that there's any clarity, even in terms of what their furloughs look like. From my understanding, a lot of the folks that are in the government HR's department were also furloughed. So there's really no communication in terms of what this is going to look like, and what the end goal is here. As it relates to performance, though, in the market, historically, the market's not really material impacted by a shutdown. In fact, it is way more than half the time up, following the shutdown. So I would say flat to down, flat to up. So it's not as if it's a market impact, but it certainly is felt by the economy and certainly by the constituents. It's quite frustrating when you're getting infighting, and it feels as if that your representatives aren't doing what you voted to have them represent you for. So I think it's a bigger story than just the market, for sure.
Yeah, and I mean, I know that they had a vote today on some kind of like temporary funding for the military during the shutdown, and that was also shot down. So it seems like so far we haven't had any traction at all, which is a little disappointing.
Yeah, I think another, and if I understand it correctly, that in the first Trump administration, that they had enacted paying furloughed employees as soon as the shutdown was over, right? Which is a good thing. And I believe that they are considering, or it was, reports had surfaced that they're considering withholding pay for furloughed federal employees, which would really reverse the standard of paying employees retroactively after shutdown. And in reality, it would be a violation of the 2019 Government Employee Fair Treatment Act, which was enacted by, Trump 1.0. So I hope it doesn't come to that. Certainly, it doesn't bode well for anybody.
Yeah. Yeah, it's a bit of a disappointment there. But we do have some positive news. Potentially, the hostages, potentially there's some peace in the Middle East. The hostages have finally come home. And it seems like we have a deal between Israel and Hamas. And President Trump seems to have been successful in putting that together. Now Trump plans to go to meet with Putin in Hungary. Could there be peace between Russia and Ukraine as well? I mean, that's a lot to hope for. But the big question that I ask you is, will any of this have any effect on the stock markets, or are we still living in the inverse universe where, peace in the Middle East and peace in Russia and Ukraine is not good for the stock market potentially? I just want to hear what your thoughts are on this.
Well, it would be remarkable if they were able to achieve what has been unachievable. And, I can't even pretend to understand the diplomacy and how this works in such complex regions. If we were to isolate the market's performance from the invasion of Russia into Ukraine and, the October 7th attacks in 2023, if you're looking at market performance, well, if you just isolate it by that, the market has essentially shrugged it off. When Russia had first invaded Ukraine, there was a blip where there was some sort of a sell-off, and it has not looked back since. So I think, I think why we're seeing more ups and downs is perhaps the rally has run out of steam, which is fine. You can't go up forever. Doesn't mean, it's pulling back into bear territory. There's going to be a correction. I think that there could be some jockeying in front of earnings. I also think in the absence, let's just isolate this to the past 3 weeks, in the absence of government data, because of course, with the government shutdown, that's not being issued. And we haven't had earnings up until, what was it? When the banks started reporting this week with JP Morgan and Goldman Sachs, we were living in a vacuum of no data, no news, right? So
Yeah.
any market moving headline has the potential, like we saw on Friday, it was almost like a release valve to, find that excuse to, take something off the table here. Look, Mike, this is just conjecture on my part, but at CNBC, I believe it was, had put out some, one of the commentators had mentioned that 30% of portfolio managers are under their bench. We discussed this 2 weeks ago. I remember this.
Yeah,
And
absolutely.
look, if you are underperforming and you get some sort of a pullback, where are you going to put it? Into the stocks that have been performing. You're not going to put it into small cap. There's just too much beta there. So it's almost like a self-fulfilling prophecy. So any kind of pullback, there is, people are going to look to take advantage of that. I don't think that story over. Are we necessarily going to see the run that we've seen over the past 2 years? No, way more than 2. Almost, I was looking at 3 years at this point. I just think it's hard to make that call when we have been in a vacuum of data and fundamentals, right? And then well, on the next slide, we'll get to this. All right, I don't want to front run it, but
yeah, don't worry about it. Jump right in. Let's talk about the China-U.S. trade news.
Oh, I was thinking of another slide. Anyway, so
one more slide. Okay,
again,
one more.
now, and I'm going to forget my point when we get to that one. Look, again, I think what we saw on Friday was more of a relief valve where you were looking for some sort of reason to take some profits off the table. Again, it was also relatively really super light with liquidity. And I think anecdotally, you had a lot of kids that were coming home from school for fall break. So there were people off the desk. Monday bonds, banks, government offices, well, federal offices, I wouldn't include that in the equation at this point, were closed. It was just the equity markets that were open. So the liquidity profile was also a little bit different as well. And you have to factor that in. I think because it wasn't a prolonged sell-off, I would interpret that as positive, but it does feel choppy, even with the banks, there's a dichotomy of performance within the sectors themselves.
Yes.
Yeah.
Yeah, I mean the other thing too is that and I want to bring this in a future newsroom is what is the denomination? How have the markets fared if they were denominated in gold? So like markets being denominated in dollar, but the dollar is having one of its worst years in history. So it's kind of strange because we have gold at all-time highs, silver at all-time highs, cryptocurrency at all-time highs. Dollar is having a terrible year, and the markets are having a great year, but they are denominated in the dollar, which is having a terrible year. So basically, that almost feels like in hard currency, meaning gold and silver, the markets have not done as well, but it's just that the dollar is very, very weak. What are your thoughts on that?
Well, I think it's interesting what you're saying as it relates to crypto. And actually, I think it was below 110, just looking at our screens here. Bitcoin dipped below 110 this afternoon. And I think it's interesting. We had a panel on digital asset legislation policy here yesterday, which is what we cover extensively. And the longer that this goes on, there is, once the Genius Act was passed, we saw what that did to the space. There was, a framework, and you understood what your operating environment looked like. We started to see the brain drain come back to the US. But the longer that this goes on, and should there be a flip in the midterms, right, that could really
Mm-hmm.
hold up the Stable Act, which is really the infrastructure part of it.
Yeah.
So that could be why we're seeing some, volatility, some sell-off um, in the digital asset space in general, but certainly, reflected in Bitcoin, because you're not seeing that type of reaction with other risk assets. So I
Yeah.
think this is just my opinion. I think it could be idiosyncratic to the digital asset space,
Mm-hmm.
because now we're back in limbo again
Mm-hmm.
with, getting Bitcoin legislation codified, basically.
Yeah. Gotcha. So we're back into that kind of a holding pattern. Which
Right.
is interesting because now, as you were saying that, it came into my mind that we are going into a midterm election. We are here in kind of almost early voting season, early voting time, and the government is shut down. So, I mean, this is all comes into this kind of political maneuvering. And obviously, we have the ongoing China U.S. are at it again. This time over rare earth metals, and China says that the U.S. is panicking. The U.S. imposes tariffs on China for rare earth metals. What I didn't realize was that rare earth metals are basically crucial for F-35 fighter jets and Tomahawk cruise missiles and pretty much every bit of advanced U.S. weapon technology. So I could see why this is a big issue for the United States.
Mhm.
What are your thoughts on what this kind of ongoing China-U.S. Trade tariff war, and does it ever come to an end?
I don't know if it ever does. Like I had mentioned earlier, the nuances and the complexities of this type of diplomacy and trade negotiation is completely over my head. I think
Yeah.
um, short term, it might feel like a win, but I think longer term, and this is just speaking for myself, that it is concerning, not understanding what the global trade environment is going to look like, how new alliances are formed. If we keep going back and forth, it also makes it tricky for people, for to get investments into the US if policy keeps switching every couple of years or every midterm, or we're not the stable partner that we've always been perceived to be. So I think, while there might be short-term wins here or there, I think longer term, and not just US, I would say this for China as well, and all of our trade partners. I mean, there needs to be some long-termism into it. And I just don't think that those conversations have necessarily taken place, or it's widely understood. Like I said, this is the complexity of it is definitely way over my head.
Sorry about that. It
Yep.
looks like we're going to just be going on this constant back and forth between the U.S. and China until this is, kind of, somehow resolved on a longer term basis. But it seems like there's always a new twist or turn along the way. And the last one, I don't know if we're going to be able to get too much clarity on, but it's just certainly seems um, something that to be honest with you, couldn't figure it out on my own. There was PayPal's crypto partner um, Paxos accidentally created 300 trillion worth of stable coin in a technical error. And will there be some fallout over this? I mean, I just put up on the slide here, whoops. I mean, this one seems like a big whoops to me, but I don't know.
I think, well, there's a couple things here, and it is Cybersecurity Awareness Month, and cybersecurity is a cornerstone of our coverage on the show. So it's a good time to bring this up because while it was a technical glitch, it wasn't a security breach. So there was customer accounts, personal identification information was not stolen or disseminated, which is a good thing, right? I think that would have been a much bigger issue as we've seen in the past when financial services companies or credit agencies have had security breaches. So I think if you have to weigh the two out, I'd rather deal with a technical glitch than a cyber breach. But the good thing is that look, it's a relatively young asset class. We're learning how to integrate these with different types of payment systems, different types of, from TradFi and DeFi and integrating the past and the present. And you know what, these things happen along the way. And then this is how you learn and you put future redundancies in place. So if we look, beyond the headlines and what it could mean for a more secure cyber framework. And it sounds as if they were very deliberate and followed their cyber incidents response plan and were able to identify it wasn't a security breach. I think that weighs more than the glitch, which it appears that they have addressed.
Yeah, I don't know if you saw this one too. I don't know I don't have a slide on this, but I believe there was this kind of self-driving cars in San Francisco that got hacked and they were like clogging up, causing traffic in San Francisco for all the self-driving taxi cabs. So certainly an interesting hack on cybersecurity month that they had, kind of a traffic jam in the middle of San Francisco for these self-driving cars, which is
Yeah,
certainly a concern of mine. But thank you so much, Jill.
you're
Great
welcome.
insights as always. And I look forward to seeing you in 2 weeks. And
All
we
right,
should be
sounds good.
starting number one best trader
Yay.
competition yet again.
All
Till
right,
next
see you
time, Jill.
guys.
Bye bye
Bye.
now. All right, let's just jump in here and take a look at how the markets are doing now. You've had quite a wild day. Yeah, so we are down on the day. Let's just look at the 5-minute chart. We gapped up, sold off. They have not quite gotten back to the beginning line on the QQQ. Let's take a look at the SPY. SPY, pretty much the same deal. Gap up, sell off, a little bounce here at the end of the day. I mean, these are kind of typical distribution patterns. But when you're at a market that's kind of at all-time highs, we have a high and a lower high. It looks like possibly a head and shoulders type pattern. So I would be very cautious and lean to the side of taking profits. If there are profits to take on the table, I would say take profits in the near term just to be, protective. I mean, markets are at all-time highs. Every asset class seems to be near all-time highs. So I think that traders are definitely leaning in the side of caution. Let's just jump to, let's see, Microsoft near all-time highs. Apple uh, also kind of off its highs. Goog at all-time highs, big blow off top, but could be in a bull flag formation that could go higher, certainly. Meta also kind of, a little bit off its highs, but certainly near all-time highs. TSLA, Tesla also off its highs slightly, but certainly near all-time highs. I mean, you just got a market that's very, very extended and in a place that probably it's safer to take profits than to than to sit on your hands. At least if you have the profits to take, it's certainly a good place to kind of diversify a little bit. Let's just wrap things up. Stay up to date with all things DAS by signing up to our monthly news emails. Simply fill out the form at the bottom of our webpage at dashtrader.com. Subscribe to our YouTube channel, Dash Trader TV, and the newsroom reminders. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. And of course, sign up for the #1 Best Trader competition. I'll see you all in 2 weeks. And who is going to be the next #1 Best Trader for 2025? Thank you, everybody. Trade well.